Assalamu Alaikum everyone, welcome back to another video. I hope you're having a great day. We're still in the earnings season. Some companies are reporting next week, some have reported already last week. So we're going to do a quick recap on the companies that have reported last week. We'll talk about the ones that are reporting next week, and then I'm just going to give you just the overview of where the market is right now, and give you some advice and that I'm giving to myself. So I want to, like I've always said to you guys, this is just for me as much as it is for you guys as well. So we're going to talk about some of the things that I'm doing, some of the advice that I've learned, some of the things that I've learned in the last few years that's going to keep me grounded and focus on what we want to do. So as you can see, the portfolio is doing all right. I think it went up about 1 or 2% last week. It was overall okay. A lot of the companies that I own in my portfolio have reported, and their earnings reports have not been bad at all. Okay. So I've had quite a few companies that reported last week, and we talked about companies that were reporting at the time. So companies like 3M came out, and it was actually a good report. UPS, it was all right. It wasn't, they didn't say anything that was basically that we didn't know already. So they talked about the fact that supply chain problems and inflations and all of that, the cost of the goods that they need, all of those things basically were kind of stopping them from making as much profit as they were supposed to, I guess. Unilever was one of the companies that actually had a very good report. They came out and they said, you know what, despite what's going on, they have a pricing power, which means then they can pass on the cost of the things going up to the consumer. So the cost of their products have gone up because that's how they can actually tackle inflation, right? And that's why the cost of our living cost is actually going to go up, and we'll talk about inflation in a couple of minutes. The other companies that reported were like Microsoft and Visa. They were both great reports. Microsoft, obviously, we knew there was a little bit when it came to the cloud side of things. Okay, that was the one that was down. It was supposed to be 43. It was 41 or something like that. In terms of growth side of things, and to grow your business, basically a sector within or segment within your business, about 40%. That's absolutely huge. But the market, the street, were actually expecting a lot higher. Visa was quite good as well. Okay, there were a couple of other great companies that reported. I still need to look at WM or Waste Management, because that's one of the companies that I would like to add to my portfolio. So I need to look at their earnings report and see where they were heading. I'm not sure what happened to Sherwood-Williams, but it was really down a lot. I think it was like 9-10% in one day was down. So I'm not sure how bad or good their reports were. So it will be interesting to find out a bit more. Qualcomm came out and they beat basically top and bottom lines, but the issue was their forecast was actually slower, basically lower than what the street was kind of expecting. And then there were a couple of other companies that I own that came and reported. The ones that I don't own actually that reported, MasterCard and Pfizer's, they were fine. Merck actually reported. I still need to go through their report, but it was okay. There was not the huge surprises, but it's one of the companies that I still haven't actually thoroughly looked at their report and compare it. Because when I say look at their report, what I'm doing is I look at current quarter, so what they've just reported, and compare it with this time last year. Okay, so a year on, has the company made any progress? Are they heading in the right directions? Okay, are there anything that I need to watch out, kind of thing? Okay, and then there's a couple of companies that I don't own that reported. So like companies like Apple and Amazon and Intel. Intel had absolutely a terrible quarter, genuinely by far one of the worst, I think, that week. They had nothing going on for them. I'm worried about that company, but in the long run, I know they will be fine. So if you're a long-term investor, this is probably, some people are saying it's a value trap right now. I'll be honest with you, I'm not sure what's going on, because it was down so much. It's like $30 something. I think it was down 10% in one day. And then the following day was down another 2-3%. So I'm not sure what's going on with the Intel. We all know, I mean, they are trying to catch up with AMD. They're trying to invest a lot of money in basically building all these basically factories. They're spending a lot of money, and they're not actually generating enough profits. Well, they were down literally top, bottom, everything was down. KLA came out, amazing report, really, really good. I went through that one. It was really nice. And then Procter & Gamble actually came up, and there was obviously, as we expected, a lot of to do with the inflation side of things, the supply of things. So their report wasn't that bad, okay. But I was hoping it will be a lot worse so I can buy more of this company, because ideally I would like to have at least £4,000 to £5,000 worth of stocks in that for that company. Colgate, again, another one that I need to go through. So that's the one I haven't actually completely gone, but it didn't look that bad at all. So I had a quick glance of the headlines basically, but it was okay. So I need to look at it again and compare it with the last quarter and see how that went. So overall, it wasn't that bad, okay. The companies that I own in my portfolio that reported, the ones that on my watch list was like Waste Management, that I was hoping that it will go down quite a bit, and it didn't, I'll be honest. So I don't know what I'm going to do. So I'm going to read through it anyway and see if there's anything that's interesting. I was hoping Pfizer will come back down as well. It actually didn't. It was very interesting. So yeah, anyway, overall, I think it was a good week. So let's have a look at who's reporting next week. So not a lot of the companies that I own are reporting this coming week. As you can see here, we have on Monday, none of the companies that I have and reporting on that day. Pinterest is actually reporting when the market closes on Monday. Activision Blizzard will be interesting to find out what's going on there. Simon Properties is also reporting. Uber Tuesday morning. Okay, you got PP there, you got PayPal, you got AMD. That will be interesting in comparison to what's happening. Intel will be interesting to find out how if AMD comes out and just says everything is fine, we're making progress, they beat the top line or bottom line and whatever. Genuinely, I think that's the end of for now anyway. That will be the end of Intel for now. I mean, they will be back in the next 5 to 10 years. But right now, I think that will be the final nail on the coffin, I think. And then you've got Starbucks that are reporting. Okay, another great company there. So it will be interesting to find out what's happening there. And then a couple of other companies, the Under Armours and the Modernas and CVS Health and Regeneron. So there's a couple of companies in there. Robinhood is reporting. Lucid is reporting. So the new IPOs companies are reporting. This company, Kodo, whatever it's called, is the Amazon of Latin America. So it'll be interesting. Booking will be interesting. I like this company, Booking.com. So it'll be interesting to see what they actually report. And then none of the so you got Alibaba's, you got Datadogs, and then you got Lilly there. So it will be interesting to see what happens just this week. But I don't think any of these companies are the ones that we were worried about in terms of them bringing the market down overall. So the ones that we were expecting to bring the market down actually reported last week. So yeah, that is just my take on what's happening in the earnings report next week. So the next thing I would just want to quickly mention is this idea of recession. Okay, everybody's talking about we're in a recession. So what does that really mean for us as investors? So what's happening right now is when we're in a recession, basically people will focus on buying the goods that they need, like the necessities, which then means companies that sell products like basically like the mobile phones and Apple, whatever, they're not gonna spend money on, like, say, 100, let's call it £1,000, for example, $1,000 or $1,500 for a mobile phone, when you are actually struggling to buy things to eat, right? So the consumer discretionary companies will struggle when there is a recession and so on, because people will focus on, just eating and having electricity on, the things that are important to them. And they're just your general household goods. So for example, in 2020 up until now, you can see how inflation has actually gone up. Right now we're looking at about over 9% inflation. So if you got money in the bank, forget it. And what this basically means for us when it comes to the inflation side of it, okay, is basically your buying power is no longer the same. So if you're for example, a company like Unilever came out and just said, you know what, we're passing a lot of these costs to the consumers. So next time you buy a product that is basically created by Unilever, it's going to cost you extra. It's the same product. The bottle hasn't changed. The shampoo is still a shampoo, right? It hasn't changed. Nothing has changed. The only thing that's changed is the price of it. So because of that, you're actually spending more on basically on the basic goods. So transportation might go up. Things like the housing and household services, clothing might go up. Furniture might go up. Restaurants and hotels. All of these things have gone up in the last couple of months and is still going up. And people are worried about, okay, when is it going to stop? Have we hit basically the top yet? So, and that's one of the things I'm a little bit concerned, because if it carries on this way, what I'm worried about is the companies that we own in our portfolios will not be reporting the type of reports that they've came out with, the type of profits they've made, right? Because if we stop buying these products that are not necessities, right, then obviously these companies are not going to make money. The earnings will go down. And when the earnings go down, that's when everyone stops buying the stock markets, because they can't see the companies making profit. And this is one of the things that I'm looking forward to in a way. Okay, let me say this. Okay, I'm looking forward to hopefully having being able to buy these companies at a cheaper price. Okay. And the reason for that is one of the things Warren Buffett always talked about is he said, be fearful when others are greedy, and be greedy obviously when others are fearful. Now, in a situation where everyone is basically worried about their pockets and whatever, they might stop buying stocks, right? But how long is the recession going to last? It could last for years, okay? Or the inflation might basically go and stay where it is right now for the next couple of years. Whatever the case might be, obviously the Fed is fighting with the inflation. That's why they're increasing the interest rates and things like that. But it's also important to think about, okay, what do I own right now? What stocks do I own? And can I see these companies being around for another 10, 20, 30 years? Procter & Gamble and Unilever are not going anywhere. Microsoft are not going anywhere. They might report a couple of terrible earnings reports, which is absolutely fine, and in this kind of situation it is expected. But that doesn't mean you don't basically invest them at all. Okay, that means you buy more of these stocks, and this is one of the things I want you to remember. Okay, another thing he said is basically Ben Graham told him that price is what you pay, value is what you get. Whether you are buying, talking about stocks or stocks, are like buying quality merchandise when it's marked down. Now, Procter & Gamble and Unilever are quality businesses. Microsoft is another one. J&J is another one, right? These companies are quality businesses that will eventually, okay, give you some profit. And while you wait, you're still collecting that dividends, okay? And this is one of the reasons I'm not too concerned about what the general markets are doing. Obviously, I'm keeping an eye on it, but generally, I'm not too concerned, because if I'm buying quality company, right, and I know the company's product is not going to run away anytime soon, and the company is not going to go bust in the next couple of years, then I'm happy to buy more when others are fearful. Okay, when others are running away from the market, that's when I want to buy more. Okay, Ben Graham has also said the individual investor should act consistently as an investor and not as a speculator, and that's really important. We don't speculate what might happen tomorrow, whatever. Are you an investor? Yeah, find good companies. So this means that he should be able to justify every purchase he makes, and each price is paid by in person. Okay, objective reasoning that satisfies him, that is getting more than his money's worth for his purchase. Now, what this means is you buy quality businesses at a discounted price. So when the stock market is going down 5%, 10%, whatever, and if we get into recession, and if basically inflation keeps going up, and then the interest rates go up because of that, and all of these things are happening, it's just a noise for now. Yes, it will impact us in a way, but as an investor, this is where when you make money. This is when you actually look for quality company at a discounted price. And if you can do that, then you are as good as Ben Graham and Warren Buffett. Okay, and this is the points. The psychological side of it is really important. It's not about investing. Is very simple. You buy stock and you keep it, right? And when if something crazy happens and the company changes, then you sell it. That's absolutely fine. But the most important thing is that you look for quality companies at a discounted price. And right now, I'll be honest with you, there's so many companies in my portfolio that are undervalued at the moment. I'm going to do a video next week, or maybe this week, about my watch list. In fact, I'm going to do it next two days, okay, on just what's on my watch list, because there's so many companies are right now undervalued, right, according to the analysts out there. Even after they reported not a great earnings report, they are still undervalued, and that is something that you need to focus on. So one of the things, the final thing I want to talk about is, so you've identified the company that you like, or the companies that you like. You identify the fact that they're undervalued at the moment. You've identified that they're not going anywhere, even if the recession is just happens, even if there's no recession, if the inflation goes up, these companies will be fine. What do? Then you dollar cost average, okay? You pick the companies that are undervalued at the moment, invest in these companies weekly, monthly, however you want, whatever money you've got, okay? Just put it to work. Especially in this this is where the time where people make money, because if you're buying these quality companies and in 10 years down the line, you look back and the price of these companies might not be the same. It will probably double, if not triple, in the next 10 years. I don't know what might happen. It might just half, it might go down. Only Allah knows what's going to happen. But it's also important to basically looking back in the last 20 years, what has happened in the stock market is gone up, right? So if that's the kind of indication of what might happen in the future, then absolutely fine. So keep looking at companies that are discounted at the moment, quality businesses. And when I say quality, I'm not talking about speculative. Please understand that. We're talking about very well-established businesses like 3M. Look at the history of this company. It's been around for generations. I was down at one point $400 to $500, right? Pounds, sorry. And now I'm only down 5%, okay, because people have realized that this company is not a trash. Okay, I've been saying to you guys, this company is great, right? Look at it, it's still here and will be here. So that's all I want to talk about today, is just think about the bigger picture. Yes, there might be recession. Yes, there might be inflation going up. Okay, the earnings might not be as great as we expected, just this earnings report, but that doesn't mean one report does not determine basically what might happen to this business in the long run. If you're buying quality companies whose business you really understand and they are undervalued at the moment, then that's all you need to think about. Okay, buy more and relax. And again, it's not a financial advice. What I'm telling you right now is what I'm telling myself. And week in, week out, I've actually been putting more money. And I've got a video coming up this week about the overall portfolio, what I've done, what I bought, what I sold in the last basically 4 weeks. Okay, I'll let you know as soon as that's done. Assalamu Alaikum. Take care.